My name is Sven Henkes. I'm the CEO of ZIEGERT, Bank und Immobilienconsulting. We're based in Berlin and we are leading real estate consultancy with focus on residential developments, focusing on newly built developments, founded 1985 by Nikolaus ZIEGERT. He's still alive. Knight Frank, who is our cooperation partner, I haven't seen yet. So Nikolaus is still very active in the business, and with him we have a strong leader with a lot of market knowledge in Berlin. We are focusing on two kinds of clients. On the B2B side, we taking care of developers and consult them on the product strategy and product development side. We have a strong research department where we provide a lot of market insights, not focusing only on Berlin, but as well on the top 8 cities in Germany. And we have a cooperation with Knight Frank since 2017, which helps us on the product development side and as well on the B2B client side, where we expand and have a big global reach with the help of this network to satisfy not only local, not only national, but as well international clients. On the B2C side, next to the sales, we focus on finance consulting, letting, as well as interior design. So we have our own interior design studio, and with the help of that, we cover all the needs of the clients on the B2B and on the B2C side. Based in Berlin, but active as well in Frankfurt. We have a joint venture with Knight Frank in Frankfurt, where we opened our office in 2017 and focus especially on the big flagship project 4, which is in the center of Frankfurt, high-rise building, 300 million euro project, and is our first step on expansion. We go ahead with moving from Berlin to different German cities, as we believe in the strengths of the German real estate and especially the residential market. And by the end of 2021, we are going to cover all the top 8 cities in Germany.
Great, thank you, Sven. Tobias.
Okay, Tobias Schultheiß. I'm the owner and founder of Blackbird Real Estate, which was founded almost 8 years ago. We focus on advising mostly sellers of commercial real estate in selling their commercial real estate. For example, just 4 weeks ago, we closed a deal where we sold a police station to EXPO, which is next over there. That's the core business Blackbird does. But 5 years ago, we initiated our first co-investment where we, together with a private equity partner, we bought a big property in Düsseldorf with a value-add approach. We sold it after 2 years to a German open-ended fund. And last year, together with other partners, we also initiated a joint venture where we bought a skyscraper in Bochum, and we are in the middle of refurbishing it. So that's basically it. Me in person, I'm in that business for almost 23 years now, and other than Rainer next to me, who focuses on Berlin, Blackbird's office is services Germany-wide. We have an office in Munich, in Cologne, and we are headquartered in Königstein next to Frankfurt.
Thank you for being here. My name is Rainer Schorr. I'm the founder and chairman of PRS Family Trust, which is actually my own family office and private wealth company. And we are investing countrywide in real estate in Germany. We have a local focus in Berlin. And in addition to that, we do investment advisory to various international and national big institutional investors and help them with their investments in German real estate, also in particular in Berlin, but also countrywide.
Sven, just in terms of Germany, looking at the more macro picture in terms of the economy, how do you see that performing at the moment, and how do you see that influencing the real estate market?
The German economy is strong and will be strong and is stable. And when you look at these characteristics of reliability, when you look at the characteristics of transparency, all these things which might have sounded boring in the past are now in these times of increasing insecurity very important. These are valid for the German economy at all and for the real estate market in particular. We always say, especially the residential real estate market is like a safe haven in Europe. looking at all the volatility in the different markets, we have a very, very stable development. Prices are increasing. They are, of course, increasing on a very stable and permanent level. We have clear processes, clear regulations, so whatever you are investing in, you know what you get. It's very much regulated, so I see only a very positive development. What we see as well is an increasing demand, especially in the top 8 cities where prices are rising even higher than the rest of the country, as many people are coming to German cities, especially in Berlin, Frankfurt and the other top 8 cities, so that you have a huge overlap on the demand side and supply cannot catch up. That means you have a huge backlog of demand, bringing the prices even higher and ensure that this development, especially in the real estate residential segment, is continuously strong.
And Tobias, obviously we've seen huge capital wanting to focus on Germany and also partly skipping over London for the last couple of years in terms of the Brexit issues. What are you seeing in terms of that capital? What's it looking for? And are you seeing new people coming to you looking for specific sectors, I suppose, within Germany?
What I see is like it's a mixture of, it's the usual thing for the last 5 years. There's a lot of US and UK money still trying to invest in Germany. Also Asian investors, for example, from Singapore, they not only look at properties, they even bought them in Frankfurt or in Hamburg. My personal experience is that a lot of international family office more and more come to Germany, and they're willing to pay enormous prices just to get their money out of the home country. For example, the property a property we sold last year was to an Italian family office. And they were really keen to get this property. They bought, obviously they offered the best price, and they proposed to put the money on a notary escrow, although they knew the money will lie there for more than a year. But for them, it was an easy game. And in Italy, they have to pay this interest fee. And on the notary escrow, they're at least at zero interest rate, so that's an advantage for them. So our experience is a lot of private money, family office money from abroad is still coming to Germany, focusing on the top 7 cities in the first run, but there are also some who try to look at B and C cities, not yet the smaller locations with around 50,000 people.
And Rainer, from your perspective, what are you seeing in terms of the clients? What are they looking for? Are they looking at specific sectors? What sort of opportunities are they looking for?
As we are investing alongside with institutional investors as well as family offices worldwide, I can tell you they are looking for exactly 3 things. First, capital preservation. Second, capital preservation. Third, capital preservation. It is not completely independent from the asset class itself, but number 1 issue is capital preservation. And they see worldwide Germany as in a certain manner as a safe haven. I have to say on earth. I can claim to say on earth because I met personally 570 different investors meaning state fund, pension funds, family offices worldwide, and I know relatively exactly what they are looking for. And the Brexit issue is a big issue for the UK. It's a pity for the UK. It's an advantage for Germany. I think that real estate prices in Germany went up at least between 5 and 10% in the top 7 cities, I have to say, because of the Brexit discussion. This is one topic. But the other topic is the interest rates. I mean, 1 year ago or 1.5 years ago, everybody was expecting Q3 2019 interest rates will go up. But the market perspective is always a perspective, and Mr. Market knows himself the best. It was proven wrong. This morning, Mr. Trump forced the Fed again to drop the interest rates. I'm speaking here not the whole day, but a few meetings with people who are desperate to get out of negative interest rates. And this affects the prices in Germany even more than all other effects.
And that for you is the biggest influence at the moment in terms of the market.
Safe haven and interest rate.
Yeah.
And a little bit Brexit, it's a cream on top.
And for them, so it sounds as though in a way they're almost agnostic about the sectors. It's more about being invested here to protect that capital. Okay, interesting. And Sven, we talked a little bit about the economy. Normally when the economy is performing well, that tends to suggest it's good news for office, for example. What's happening in terms of office, particularly occupancy rates? What's happening with development? How are you seeing that sector at the moment?
I mean, my home turf is residential, but of course we are looking at commercial as well. As at the end, the developer has to decide if he gets a plot, which is the main challenge at the moment. Do I do commercial or do I do residential? Both or vacancy rates are really low. That means when you look at, for example, Berlin, on the residential side, you have a vacancy rate of 1.4%. Which is absolutely low, so that even moving is difficult and people stay in their apartments. On the office section is, I don't know exactly the numbers, but I think similar. So it's very attractive. You have a big demand on both sides. So when I look at all what Rainer already said, we see it on the residential segment as well. We see an increasing demand locally, we see an increasing demand nationally and internationally as well. And the interesting thing is when I look at our client base, we have 50% local buyers, 25% national and 25% international. That means it's quite a good balance. It's not skewed to one target group, which means for me it's balanced, and with the balance it's healthy.
Okay, good. And Tobias, from your point of view, how do you see the sectors? Where do you see people looking? We'll pick up residential again in a minute, but where do you see that at the moment?
I still see a lot of interest in office, an increasing interest in what is considered niche properties like student housing, like healthcare, or also light industrial. Obviously, all different types of investors, but from our experience, offices is still the mostly sought after property, and I'm sure this will not change over the next 2 to 3 years.
And is that in the main centres, or are you finding that people are also looking at the B and C cities? And is there a change? Are people looking more at that than they were previously, either as a search for yield or maybe just in order to access product?
It is the search for yield that drives investors or forces investors to not only look at A cities but also to invest in B cities like Nuremberg or Heidelberg. Some started to now look at C and D cities, but since we don't have this much of transparency in these locations yet, these are typically either international opportunistic investors who can't pay the asking prices, or it's German private money that goes to C and D cities, or if it's a niche product like a hotel. In this respect, you can also see institutional investors who go to smaller cities.
And Rainer, is the biggest challenge availability of product in the market? Is that the biggest challenge that you face in terms of providing the opportunities?
Product is always of utmost importance, and as the existing assets are already relatively expensive, although for international standards. For instance, we can say London, Paris and Berlin are 3 capitals And Berlin is relatively cheap, but you cannot compare the three cities because Germany is a federal state and UK and France are not, which means Paris and London are always different, but the price level is relatively low compared to those cities, but there is no comparison between those three cities. And the product which is the most being searched after are new developments. But new developments are depending on land. And a big bottleneck is providing land in a certain size that a developer can afford to buy. This is a very big challenge because the majority of the available plots don't fulfill the criteria of a developer. They are either too big or the zoning process will take too long. And as there is a certain gap in the German financial industry, which is not the case in that drastic manner in other European countries, the German mortgage bank isn't allowed to lend money to a developer against land which doesn't have an actual building permit, which means there is a lot of mezzanine coming to Germany to fill this gap. But to answer your question, finally, the biggest lack is a huge number of plots to develop on, more or less regardless of the asset class itself. It's both residential and commercial. In Berlin in particular, even a little bit more towards the commercial part, because the demand for residential, it's obvious, everybody knows, there's a lack of apartments, but the lack of office buildings in and around Berlin is even much higher. You have to see that if you look at the German stock exchange and the DAX, the top 30 companies, none of those 30 companies have a headquarter in Berlin, which is unique to all other countries in Germany. And there are actually there are millions of square meter waiting to come to Berlin to move at least a part of headquarter or research department for human resource purpose to Berlin.
Good. And I want to drill down a little bit more into this Berlin story, because certainly in a lot of the topics that we've been covering, a lot of people outside of this, when we've been talking about winning cities, and even here this morning when we were on capital flows and winning cities, one of the views was that Berlin would actually grow to be almost like a Paris or a London in terms of its importance, and that even within that sort of federal cities idea, that actually Berlin would be the one that will become a much more significant and bigger city. How do you see that, Sven? Is that something that you believe will also happen, irrespective of the airport, by the way?
Yeah, I fully believe in it, Richard, because what you should not forget is that Berlin is just 30 years old. And if you compare it with other cities in Germany,
exactly,
or even in Europe or the world, it was lacking, don't know, 50, 60 years of development. So you had the former eastern part, which was all state-owned, and in the western part, nobody invested, because it was kind of an island. Then since 30 years, this market is really developing, and it's catching up a lot, but the real growth started maybe 10 years ago, especially in the newly built development sector. And from my perspective, it's unbroken. I still see Berlin as an elevator on the rise. Many people joined on the minus levels, and we're taking all this price increase with them when they invested. But now we are between ground floor and level 1, so it's still time to catch up the elevator to reach a very, very high level. And I think from the pure potential, Berlin has the potential to become really a global city. Still needs to focus on a joint agenda on developing, because as Rainer rightly pointed out, there's a lot of space basically there, but it's not available to the market. And there we see a lot of, say, dynamic needed in order to make sure this plot is released, and then all the demand which is there in the market can be fulfilled.
And this is because it's owned by the local government, or owned by, is it public land that is owned, or is it, why is it not available?
No, it's partly public. So we have a lot of even agricultural space in the city of Berlin, which could be used. There is a thing like Tempelhofer Feld, like a former airport in the midst of the city, where the public decided not to convert it into social housing, which would have taken a lot of pressure from the market. And you have, of course, a lot of private people who are owning the land and are only willing to sell for a very, very high price. Because they look at the market price and then they calculate down what could they take from the plots. And either they sell it or they just keep it because they don't have any alternative really to do what to do with the money. Given that interest rates are low, you have negative interest rates, other asset classes are not comparable to real estate. So that's an issue.
We've had a couple of sessions here also around the sort of life cycle investment opportunities, so all the way from student housing through micro-living, through co-living, ordinary residential, and then up into kind of senior living. You mentioned opportunities there in student housing. The demographics also should suggest senior living in a way in Germany, almost more than anywhere else. Are you seeing investors beginning to look more at those sort of niche sectors within the residential side?
Yes, we see investors shifting into this niche, but a lot of them don't really understand this product because you have for care homes, for example, there's a lot of regulation. It's not real a property deal. It's more of an operating company with the real estate as the shell. But yes, since there is a lack of product, investors also shift to this type of property.
I mean, it's interesting because often it's viewed as a kind of late cycle play as well, that move towards more income producing kind of assets and residential especially. And just pick up for me the sort of one of the concerns that's often raised in London recently, looking at the Berlin market, is the rent control aspects. Is that a problem that's being raised for you, Rainer, or indeed for you, Sven?
It's a topic, but it is not only a Berlin topic because it's a political trend European-wide. Berlin made a move in June, but I can tell you Vienna made a move in January, which is much more drastic than the move in Berlin. I come to the move in Berlin later. Much more drastic means if you want to construct residential, you don't have to go to a zoning scheme to get affordable houses like in Berlin. It's only related to zoning schemes, to a full zoning scheme, I have to say. But if you construct something in Vienna above 5,000 square meters, you have to put 50% affordable houses, and the plot prices per square meter residential area are limited to 370 euros per square meter. The outcome is that the applying for building permits in Vienna for residential dropped by 85%. This is by far not the case in Berlin. As first of all, which is of utmost importance, if there was a rent cap, which I really doubt that it will be in place, it's not affecting new construction at all. On the other hand, it was an ignition to the whole market to focus on new construction rather than existing buildings. I'm an investor too. I would also look for new construction rather than for existing buildings, because there's a certain a certain uncertainty that perhaps there might a rent cap come or not. I guess not. Because the coalition in Berlin has, let's say, various arms, and I don't think there will be anything like this in general. But never mind. The whole issue investing in residential, in existing residential buildings, not only in Germany but in Europe, is a bit poisoned. It's poisoned. And we can see it in the behavior of our investors. They say, okay, existing apartment buildings would rather like to go to Hamburg. Because Berlin, the rent cap issue, we want to have a red carpet when we are an investor, but there is no red carpet at the moment, and things like that. There are soft factors. Soft factor is a bit poisoned. Hard, I can tell you, the prices for land are going up, because there you can, without any rent cap, you can construct what you want and collect rent what you want. And therefore, I mean, it's unbalanced, or it will become unbalanced, which means new construction will even go more expensive, whereas existing buildings might go down a bit. Might go, in theory. But one of the biggest transactions ever occurred in Berlin took place just 2 weeks ago, one in existing buildings, which means the market, as I mentioned in my first statement, is looking for 3 things. Capital preservation. I don't want to repeat it.
Okay, good. So does that mean, Sven, that a lot of the opportunity then is in this new build area for residential rather than existing buildings?
Yeah, definitely. I think that's the most important thing for the development of the market, to bring more product to the market and satisfy the big need we are having there. But the main issue is the availability of lands and plots, the costs of it, and then the permission part, and then the costs of building it up. So this is all, as Rainer rightly pointed out, is increasing and increasing, which is leading to this higher price points in the market. It's not that the developers or investors are increasing their margins over proportionally, but looking at the cost perspectives, their margins are really going down, and that's why they very often are hesitating really to invest or carefully consider where and when to buy a plot. Most important is, if you consider this, you need the right consultancy, you need to make sure you have the right product, you need to make sure you target the right buyer group, that you get or increase your probability of successfully selling it. Either on a block, which is in Berlin at the moment still a little bit pausing, I would say, giving all the insecurities on the investor side. But you still have the exit on the individual sales side, where you have this huge demand, which is accumulated since 2010. So the backlog in Berlin for residential units is around 100,000 units. So that means is a lot of potential.
Okay, good. And just from your point of view, Tobias, for international capital looking to access the markets, are there areas where there's a sort of sweet spot where it can compete better on some deals than maybe, whether that's smaller investors or larger investors, than some of the domestic capital, or will domestic capital nearly always win out?
Not always. Because as I mentioned this deal in Hamburg last year, we only talked to 3 local investors, German investors from Hamburg. All of them were not able to compete with international pricing, because that's my explanation. They knew the location too good, and they knew the problems of the location, so that's why they came with a lower bid. International investors, they only see Hamburg is one of the big cities in Germany. It's with a sound economy, so, and we can get our money out of our home country into Germany. So in this respect, they are not. They don't only compete with Germany; they win these transactions. In terms of, say, smaller cities, C&D locations, it's a clear, it depends. I see international money that wants to invest in these smaller cities, But given the lack of transparency, they have the fear that they can do something wrong. But Blackbird or any other transaction advisor are definitely willing and able to assist these investors to come to Germany and not only invest in Stuttgart or Berlin, but also invest in Limburg or in Nordhorn or in in Singen next to the Lake of Constance, which are cities an UK investor may have never heard of, but they are also sound cities with a good economy, with low unemployment rates, where you get much higher interest rates compared to 2% for an office building in the CBD of Frankfurt.
So your risk is liquidity in a sense, and also making sure you've got the right partner to work with, because at some point you're going to have to asset manage that and also exit at some point. So one last thing is, you're carrying that report, Sven.
Yes.
What is it? And is that research that you're doing particularly on the residential markets? I suppose just tell me a little bit about the report, because we haven't really learned a great deal about that. So tell me what's in it for everybody here.
Yeah, thank you for pointing it out. So I was already a little bit irritated why did I carry it with me, but thank you for asking. No, it's our ZIEGERT report. It's our flagship research. We are covering the top 8 cities of Germany on the residential side, and the interesting thing is we look at market dynamics from different perspectives. Not just as the, let's say, one-dimensional transaction side, but take another perspective, which is the city dynamic. Because what we see is the transaction might be stable, they might stagnate, they might go up or down, but the dynamic of the city is the even more important perspective. Because from my perspective, we can discuss political things, we can discuss up and downs in the market, but as long as the city is lively and is dynamic, many people are coming into the city, the economy is growing, the unemployment rate is going down, and you still have on top a very emotional part, which is especially important for Berlin. You can say you cannot stop any development of the cities, and you cannot stop any market laws. That means, from my perspective, what we see across all the 8 cities in Germany here is, let's say, a very positive future. They are all developing strongly. They are all developing better than the rest of Germany. Still have their individual connotations which are important to look at. You mentioned Hamburg, for example. I think it's a very interesting market. When you look at the prices of Hamburg, they are a little bit lower than Berlin, but the rental fees are higher. That means you get higher yields. But from an international perspective, Hamburg is not yet developed. Even still, it has the most international history of the German cities, with a big harbor and access to, let's say, international markets through that. So there's a lot of topics we are covering, not only the market and number side, but as well the city and the dynamic part of it, more editorial, partly lifestyle, and with a clear focus on product. As Rainer said as well, product is the key. You have a good product, then you can do whatever you want, you will successfully sell.
And it's interesting how that sort of livability, wellness, lifestyle, those things about cities and why then companies want to set up there, and how that attracts the economy and also the people to come are becoming much more important parts of the discussion. And in fact, the next session is on that, and I'll pick up some of the things we've said here about that. So last question from me, I suppose, is if these good people here are looking to invest into the market, where should they invest? Where would you be investing your money or your clients' money at the moment in the German market? Let's start with you, Ryan. Let's start with your view. Where would you be invested if you'd got to tell us your secret?
It's not a secret. I mention it again and again: capital preservation, and in comparison to existing assets which does not yet exist but might exist, they have the highest value appreciation. It's not gold, because gold you cannot construct on, but land you can construct on. Land.
Land. Okay, great. Tobias.
As I said, I do already have a portfolio of smaller properties in cities between 30 to 50,000 inhabitants. I do focus on properties in the commercial areas, not on the high street retail streets. Why? Because there I'm in competition with a local dentist or a local tax accountant who pays much higher prices, which I don't want to pay. But when I go into a commercial area of these cities, I find office buildings or mixed-use buildings with like warehouse and an office. You get properties in a range of 8 to 12 times the rent, or in other words, with a gross initial yield of more than 10%. You still have very stable tenants because they are what I call them the backbone of the German economy. The backbone, I don't have to explain it. And my properties, they are fully let with small tenants. It's comparable to multi-resi buildings where you have 100 tenants. Someone you lose one, but then comes a new tenant. And that's where I put my money in, where I will put my money in over the next years.
Okay, great. Thank you. Sven.
I'm a little bit biased, of course, but I would invest into residential properties in Germany, of course. I do personally as well, so I can give that statement without feeling bad. Depends a little bit on how you're structuring. Are you more on the, let's say, on the lower level with medium leads and a higher probability of appreciation? You would invest into Leipzig. If you really go for the safe bet, you go to Berlin. If you go for the safe bet and are willing to pay a little bit more, you go to Frankfurt. And if you really want to have it safe, but pay more and more and more, then you go to Munich. So all cities, they have the potential, but you need to look at the right development for you on the level of your risk affinity and, of course, the budget you are having.